declines in linear TV revenue. Our Julia Boorstin joining me now in studio with more on Disney's results. Julia, how is it going?
Well, I think that there were some disappointments, particularly in the direct-to-consumer streaming business, as well as the parks business falling short of analyst expectations. But I interviewed Hugh Johnston this morning on Squawk Box, and he talked about the fact that they're increasing their dividend, they're buying back more stock, and they're really optimistic over the long run, not just on parks, but also on the direct-to-consumer businesses paying off.
On the parks part, I'm particularly curious about that because parks and then cruises, which they're gearing up, that's a lot of money. But how much of that is going to be domestic versus the international business really needing to continue to stay strong?
Well, you're right. They have 2 new cruise ships that are coming online, and Johnston said that even though they have this additional capacity, they're still booking at the same level. They're going to be able to fill those cruise ships. And he did note that bookings for the fiscal first quarter, that's this quarter right now, are up 3%. And he said Walt Disney World amount per spending per head was up 5% for the quarter. So they're seeing different areas of strength, and he says they do see momentum going into next year. But I think there's this question with the cruise ships. Those were such a big investment, and it sounds like that investment will pay off.
I wonder if Disney is an example of a company that might be overly weighted toward luxury because the theme parks, the cruise, like all these prices have gone up so much. You hear people talking about that. You see people hiking prices on these streaming services. If you can't rely on luxury to drive as much anymore, are they positioned okay?
I would argue that the streaming services are not luxury. The streaming services are accessible, and they're really pushing the bundle, right? They said for ESPN, the new all-inclusive ESPN app, 80% of new signups for that ESPN app are paying for a bundle, and they're discounting the bundle, so it's very affordable for the first year. They're basically giving away half of those apps for free to get people locked into that bundle. The parks and experiences business is a different argument. That is much more high-end. Hugh Johnston didn't use the word choiceful. He said consumers are being far more choiceful in their spending. But he said that people don't skimp when it comes to Disney vacations. So it sounds like maybe they're being a little bit more thoughtful about where they're spending, but they still have some momentum, some growth, maybe slowing growth around the parks, but people are still booking the parks and the cruises, which are not cheap either.
You can't skimp. You just don't go. Julia, thank you. Well, that big market sell-off today came as concerns about AI valuations are hitting big tech hard. So what other sectors could be a good place to move your money? Healthcare has had a big rebound off the bottom. Is there more room to run? And as we look at